Robots are about to become the next trillion-dollar trend. Elon Musk says that they could eventually outnumber humans. So the first thing most people do is they go on the internet and find the most impressive robot out there. The one that walks the best, lifts the most, does all the fancy stuff and the backflips, and they go ahead and they buy that company's stock. And I get it, but honestly, based on all the research I have done on this topic, that is the worst way to play this. Because in big technology waves, the famous name almost never the ones that win the most. The people who actually got rich off AI weren't betting on the flashiest names. They were positioned in the stuff underneath it. And the robots are about to do the exact same thing, except this might be even bigger. And it's also not some far-off prediction either, because right now, humanoid robots are already clocking into real factories and working full shifts next to people right now. The biggest banks are calling it a multi-trillion-dollar market, and the money is already pouring in. So in this video, I'm going to break down what's actually happening in the world of robotics and the two specific investments that I am buying with my own money right now, because there's a lot of ways to play this. And the real question is simple: which one gives you the best upside potential with the lowest risk? My name is Zack Bakos, and I'm a wealth management and financial planning professional. I've been investing for about 10 years. I've grown my own investment portfolio into the millions. I have also coached over 2,000 people. So everything that I'm about to show you is something that I'm actually doing or have done myself. And this is not financial advice. I'm just simply sharing my research and how I am personally thinking about investing into this trend of robotics. Now, before we get into what I'm buying, we need to talk about what is actually happening in robotics, because honestly, this is moving faster than most people are realizing. For the last 10 years, when you think about a robot, it was basically just a dumb arm bolted to like a factory floor, and it just did one task over and over and over and over again. You couldn't really think. And if you move something a little bit like by an inch, the robots just get stuck. But what we have right now is a completely different machine, and people are calling it physical AI. The simplest way I can explain it is, imagine the same AI that powers ChatGPT and Claude, extremely intelligent, almost like super intelligence, all-knowing, but you give it a body. It can recognize objects in a massive room and understand what is actually happening, and it can do something about it. So this is not just a demo anymore, because this month, the first humanoid robots have already started getting shipped into real car plants and warehouses to work real shifts. Now, there's one company that went from building one robot a day at the start of the year to do one robot every single hour right now. And Elon Musk is saying that everyone is going to own a robot one day in a few years. Now, whether the timing is exactly right and how quick or fast it's going to happen, nobody really knows that. But this is clearly something that is going to be one of the fastest growing markets in the world. So why is this market going to get so big? Ultimately, it comes down to one thing. A robot that can do real physical work is not going to go after a small, tiny corner of tech, because it's going after human labor itself. And the labor is the single biggest cost in the entire economy around the world. And that's why the numbers are getting so massive. McKinsey look at this and put a real figure out of it. They say the kind of general purpose robots that we're talking about are basically a brand new market today, a couple of $1 billion, but they expect it to grow to $370 billion in the next 10 years. And some people on Wall Street think that the whole space could eventually be worth trillions of dollars. Now, this is just my read on it, on where things are heading. I'm making a call here. I could be very early as well. But even with the careful numbers, the conservative numbers are out there, the growth potential here for these companies is huge. And the money pouring into these companies is climbing very fast as well. So the opportunity, in my opinion, is real. The only question is, what is the best way to invest into this segment without getting burned? And this is the part that actually decides how I invest. Every one of these robots, no matter which company wins, needs the same thing inside it. They will need eyes to see, they will need chips to think, and they will need the motors and the joints to move, and sensors to understand the world around them. So think back to the old gold rush times. Who actually got rich during those times? It's not the the most people who were digging for gold. Most of them went home with actually nothing. It was the people who were selling the shovels, because every digger needed a shovel no matter where they were digging for the gold. I think with robotics, it's going to be kind of the exact same thing. Personally, I'm not looking to bet on individual humanoid makers directly. I'm actually looking to put my money into some of the more boring companies around them. The companies that are quietly making all the parts that every single robot in the future are going to need. So those are my shovels. And here's the biggest mistake I watch people make over and over when investing into new and emerging trends. You hear about all robots, you get super excited, and then they just go straight to the most famous company that everybody is talking about. So you get into Tesla at its current valuations, or you look at what some of the other fanciest looking robots in the market are, like Stiger or Unitree. And honestly, some of those companies might do great, and I'm not saying they will not, but betting everything on just one robot maker is basically a coin flip, because most of these makers are going to fail. And this is just how every technology wave works, where one or two company wins huge and the rest of them just quietly disappear. And this is where it gets even trickier, because most of the world's humanoid robots are being assembled and built in China right now. As a regular investor, those companies are genuinely hard to be investing into right now. And on top of that, the hottest names are likely to go public this year or next. But the thing about IPOs and buying them right away in the first year is that usually when a company goes public, the early money, these were venture investors who already invested a couple of years ago, are sitting on huge profits and are looking to cash out at the time of the IPO. So it's usually best to invest in them about the first 50% correction after the IPO that these companies go through. And there's a lot of ways to get burned chasing one of these shiny names, which is something that I personally want to avoid here. So here's what I do instead. And just so we are clear, this is what I'm doing personally with my own money. I'm not telling you what to buy. Nothing here is guaranteed. I'm just sharing my own research. I recommend you to do your own research as well and make your own decisions. The way I'm thinking about it is that I want to have two different investments. One of them is a bigger, safer core, and a smaller, higher risk bet on the other side. The core investment is a robotics ETF called KOID. So instead of betting on one robotics company, it spreads my money across dozens of them. The companies that are quietly making the parts of every robot it needs. This is an equal weighted ETF, so no single famous name can actually sing this whole thing. And the best part is that this is a global ETF, so it gives me exposure to Chinese and Asian supply names that most of us cannot easily access and just buy directly. So for me, that's the simplest way to get a diversified purchase into the overall segment in through this one ETF that kind of covers the whole supply chain instead of trying to guess one winner. And honestly, this is just the more conservative way to get into it. But if you want something that is more higher risk, more upside, and you can handle a bumpier ride with volatility, this is where my second investment comes in. And that company is called Ouster, OUST. And what they make is basically eyes for machines and robots. So the sensors that lets the machine actually see what is around it. And here's why I like it so much. This is not just a robotics bet, because cars need these sensors, drones need these sensors, warehouse robots need them, smart traffic light system need them. Basically, anything that has to see in order to move or make a decision will need this kind of technology. So I'm not betting on a whole shift, not just one product. This is just a real business, not a science project. The last year, they've already shipped over 25,000 sensors, and their sales grew by more than 50%. And they have over $200 million in cash. So it's not a small company. It's still relatively small considering to like NVIDIA and some of the bigger AI players, but it's a company with a lot of potential. And obviously, it's because it's a smaller company, more speculative. This is a more speculative bet from the ETFs versus betting on something individual, high risk, high upside potential. And which is why I would be allocating less of my portfolio to this individual bet. Now, here's how I actually want to buy this, because how you buy matters just as much as what you buy. And I'm looking at it kind of from a perspective of 12 months, not necessarily like this month or next month. I'm not trying to have the perfect entry into either of these. I don't just want to dump all of my money into the market at once. So I choose to dollar cost average in. That means that I'm buying a little bit every couple of weeks. And if you get a proper dip across all markets, that's when I'm looking to scale in heavier into the markets. And where you land is really comes down to your own risk appetite. Again, if you're a more conservative person, an ETF on its own might be enough for you. If you want more upside and want to have more volatility through swings and bigger upside potential, then going with the core bet of a single stock could play out better. Again, this is just my approach of how I'm doing it, the calm and very, very patient way. To me, this is exactly what it looks like to be early to a new mega trend, because let's be honest, until we see robots running around everywhere and maybe you having a robot at your home yourself, we are very early to this whole thesis. And that's kind of the whole edge here. And that you're not late to this. And a lot of these companies are going to see massive growth over the next 10 years. I'm not chasing the hype either, where I'm putting all of my money into these companies. I'm using about 10% of my investment portfolio to allocate to more robotics related investments. And again, part of it is going to be a quiet, diversified bet across the whole supply chain. And the other one is going into an individual company. And if you want help actually building a portfolio around trends like this, then make sure you subscribe to this channel, because we're going to share a lot more interesting information.